So I want to go over 5 stocks that I want to buy ASAP here, one of which I already own, and obviously the other 4 I do not own right now. So I want to break down very quickly what's going on in the markets today in this video. We'll talk quickly about Bitcoin and Ethereum, and we'll take a look here at these 5 stocks. We'll break down some numbers and talk about where I'd be willing to buy these stocks. So sit back, relax, and let's just dive into the video. So it's currently about 10:15 a.m. on the East Coast. We have all of the indexes right now. They are red. Nasdaq's down 0.5%. Same with the S&P and the Dow for that matter. And we have the Russell holding up the best. That is only down about 0.1% right now, as we have the VIX down 0.9%. And silver, guys, holy crap, silver's down 3.5% today, getting destroyed. Gold is down 0.2%. And when it comes to the overall markets here, triple Q, we're still seeing a move under the moving averages here on the 20-day chart. We have a death cross. That is not good. Same thing here on SPY. You guys can see currently it is under both moving averages on the 20-day chart, death cross. Same with triple Q. So that is not looking good at all for the bulls. And if SPY breaks 370, and if triple Q breaks, let's say something like 275, 270, there's going to be more red, more downside. The bears are going to dominate, in my opinion, at that point. Now, did we get a break under those levels quite yet? No, we did not. So keep that in mind. We're not collapsing down quite yet, but it could be coming later today, maybe at some point next week. And mind you, Monday, the markets are closed. Maybe some point Tuesday to Friday next week. So with that being said, guys, I don't want to go over the markets or spend too much time on the overall markets in this video. I actually want to dive deeper into the stocks. But first, let's take a look at Ethereum, Bitcoin, and see what those are doing right now. Like I mentioned, it is about, 10:15, 10:20 on the East Coast right now. We have BTC chilling at 19,370.50 roughly. It's down 3% on the day. And what we notice, holy crap, I just realized, I did not see this until now. When did this happen? I guess it happened last night. There was a wild move on BTC, it looks like. It went from 18.2, that was at about, 5 on the East Coast, roughly. It went from 18,200 at 5 on the East Coast. It looks like we had a squeeze all the way to 20,700 by about 8 p.m. on the East Coast. That is a massive move, guys. We're talking $2,000 move, and then that ended up, we ended up selling off after that. That ended up being a bull trap, 100%. We hit 2,700. And then the seller started piling in, took this thing under 19, and now it's right around 19.3. So I didn't realize that till now. Wow, what a move on BTC. I'm sure Ethereum followed on that. Let's see here. Yeah, Ethereum went from 997 yesterday. We talked about that. It was at 1,020 roughly. And then at about 8 p.m. yesterday, Ethereum, boom. Ethereum went from 1,000 to 1,100. And now it's at about 1050. So the critical levels on Ethereum, Bitcoin, I've been mentioning this in all my videos, guys. So I don't want to get too repetitive. It's 19,000 on BTC. Well, it was 20,000, but we clearly broke that. Now it's 19,000. And Ethereum, it's right around 1,000. So with that being said, let's go over. And by the way, if you guys are finding value, hit that like button. Make sure to subscribe and get your free stocks from Webull. You get 6 stocks from Webull and 10 stocks from Moomoo. Link down below. And if you want to join my Patreon, today's the best day to do it. First of the month. Check out my Patreon. Link down below. Or you can go to StockSurfest.com/Patreon. So with that being said, let's go over these 5 stocks. Now, I've talked about these stocks on my channel a lot, so it's not like you guys haven't heard of them. The first one, and let me make sure you can see this, is NVIDIA, ticker symbol NVDA. NVIDIA is number 1 of 5 stocks that I want to buy ASAP. And I want to just break down some numbers here on Yahoo Finance, guys. This is one of the tools that I personally use. Yahoo Finance here shows market cap is $370 billion for NVIDIA. So by no means is it a small company right now, guys. The P/E ratio is a 39, which is still relatively high. But when you look at where NVIDIA's P/E ratio was maybe a year or two ago, it has come down a lot. And currently, they've done well in the past 12 months, $3.73 of EPS, and their dividend is a whopping 0.1%. Crazy dividend yield from NVIDIA, guys. So if we go over here to financials, and I'm going to zoom through this, I'm going to try to at least, and not have this video be too long. What we notice is it's a massive growth company on the top line. Revenue was $11.7 billion in 2019. $10 billion in 2020. Okay. Wait a second. Yeah, that's right. Okay, yeah. $10 billion in 2020, 11 billion roughly, $16 billion in 2021, and now in 2022, trailing 12 months, roughly $30 billion. So this revenue has been exploding over the past couple of months. And if we come down a little bit here, let's see. Do we see anything on EPS growth, or how they're doing on the bottom line? I forget what line it is here on Yahoo Finance. Where is it here? I think it's right here. Yeah. So yeah, their bottom line's been growing. Looks like net income, $4.1 billion in 2019, $2.8 billion in 2020. So that's been growing over time. Now the question is, based on a PE basis, what would I be willing to pay for something like an NVIDIA? So let's say the S&P 500 right now is, let's see, let me search this up. S&P 500 P ratio. Let's look that up. Right now, it's probably something like a 19. Okay, there we go. S&P 500 P ratio is a 19. We have NVIDIA at a 39. I'd be willing to pay something like a little bit of a premium for something like an NVIDIA, maybe a 25 to a 30 P. So if this stock comes down to something like 100, 115, 120 bucks, that's where I'd be willing to start buying a little bit. And preferably under 100 is where I would love to load the boat on NVIDIA. The next stock here is Adobe, ticker symbol ADBE. You guys can see here. This is a $171 billion market cap. PE ratio trailing 12 months is 35 on Adobe. They do not pay a dividend right now, and in the trailing 12 months, they've done $10 of EPS. So they're making money. They are profitable. That is a good sign. And if we go over here to their financials, let's pull this up. Financials, we see here, they have been doing well over the past couple of years for the available data that we have right here. They did $9 billion in 2018 top line, $11.1 billion in 2019, $13 billion in 2020, almost $16 billion in 21, and now in the trailing 12 months, they've done about $16.1 billion. So they're growing even in the trailing 12 months, and that's pretty good considering the economy's obviously slowing down. We're in a recession. Inflation's running rampant. A lot of people maybe are cutting back on something like an Adobe. Maybe they had Adobe Illustrator, Premiere, After Effects, and Photoshop, and maybe they're like, oh, I don't need After Effects, so I don't need Photoshop. Maybe I'm just going to pay for one of them. Me personally, I pay for just one, Photoshop. I have Photoshop. I love the product. And I'm sure a lot of people, had five of their products, or maybe they have the whole suite. It really depends on what you buy, obviously. But, maybe people are cutting back a little bit, but it's still growing, top line. And when it comes to, let's go back to the, let's see here, the net income. I always I always lose it. There's so many lines here. Where is it here? Not net interest income. Oh, here it is. Net income. $2.6 billion in 2018, $3 billion, $5.2 billion, $5 billion. So they're growing. That's pretty solid in my opinion. And their PE is at 35. So again, it's not extremely low, but it's not very high either, considering they are growing. And for growing companies, you got to pay a premium. So I'd be willing to pick up Adobe if the PE were to get, honestly, to a 20 to 25. That'd be a good spot. That would be Adobe probably $275 a share, maybe $250, $300 even. That'd be a decent spot as well if you want to it depends on your assumptions, right? Where you think the stock could be going. Another one is Starbucks, which I used to own. I used to own Starbucks. All you guys in my Patreon know that. And funny thing is, I used to own it when it was in the $70 range. Last time it was in the $70 range, right? Which now it's come down a lot. You guys know Starbucks was well over 100. Now it's at $78. And by no means is Starbucks cheap right now, in my opinion. It's not like a bargain basement value. It's not. But currently, the P ratio is 2021. We have a 2.5% dividend yield, so not too shabby. Starting dividend yield, assuming you were to buy it today, 2.5%. I'm not telling you to buy any of these stocks today, guys. Please do not do anything based on this video. And for revenue, we notice Starbucks is not growing like a weed anymore, meaning it's not growing 40%, 20, 30% a year. It's probably growing 5-10%-ish, maybe a little bit more, a little bit less, depending on the year. 2018, they did $24.7 billion. The next year, they did $26.5 billion. Then they shrunk in 2020, $23.5 billion, $29 billion in 2021. Okay, it depends on the year. Some years they shrink. 2020 was a tough year. Okay, that makes sense. So yeah, 5, 10, 15% revenue growth, and trailing 12 months, they've done $31 billion. So yeah, there's some troubles in China. Did they not pull out of Russia as well, if I remember correctly? I think they did. So this is good. It's heading in the right direction if you do want to pick up Starbucks shares, but P ratio 21. I'd like to see Starbucks probably 15 PE, 16. That's when I'm like, okay, this makes more sense. And even here on Yahoo Finance, it says near fair value, even though I never just buy based on a website's analysis or whatever, but it says near fair value, and I would agree with that. Honestly, I think it is near fair value. Now, is it undervalued? No. And that's what we want to get it at, undervalued with a margin of safety, which stock price probably in the 60s. It's got to get in the 60s for me to consider it, at least. So Starbucks, SBUX, I like it. Now the next one here is Apple. I want to buy more Apple very soon here. I'm not going to force it because the P ratio right now is 22. Trailing 12 months, and we're in a recession where earnings will probably suffer. For sure will suffer, as people are not going to be buying or have as much emphasis on picking up the new latest iPhone, in my opinion. So Apple for sure will be in not in the gutter completely where they're down 50-60%, although that could happen. I'm not calling for that, though. I'm just saying it could happen. But you got to be realistic with yourselves here. Is Apple going to go to something like a 10 PE? I don't personally think so. But a 15, 16 PE for sure. And if Apple were to get to that, maybe low hundreds per share, and I've said this before, guys, I'm going to be buying more Apple. This is a stock that I've owned for years, but to be honest, I haven't been buying Apple at all recently. I can't even remember the last time I've bought Apple stock. In fact, I was trimming it. You guys probably, I've probably mentioned it in the videos. Patreon members know I was trimming this. Did it hit 180? I literally think I trimmed some at 182, guys. I'm not even BSing you all. Maybe it never hit 180. It was very high up there, 165, maybe 70, something like that. I trimmed Apple, and I'm looking to buy more, but it has to get to the right level. We all know Apple's growing, but in a recession, they're going to get hit. And if that market cap comes down to something like a 1.5, 1.75 trillion, price gets down to 100, 110, 15, that's where I'd consider, okay, maybe nibbling a little bit more. But for now, I'm being patient on Apple. And another one I'm being very patient on because we're in a recession, it might get worse, is Ford Motor Company. Guys, Ford is one that could for sure get hit even more. Look at it now. It's almost under $11 a share. And this is something that I was saying months ago when Ford was 16, 15, 17 a share. And I was talking about it. I want to buy Ford, or I'm not even going to consider buying Ford unless it gets to 12, maybe under 12. And here we are. Months later, we're under 12. Now we're about to be under $11 a share. And although I do not look at Yahoo Finance and look at their analysis just to buy, here it does say undervalued, guys. It does say undervalued, but we're not going to base our judgment off of that, obviously. But it makes sense because I do believe it's now getting to a point where it's undervalued. But I think if we could get shares under $10, $8, something like that, that would be a good margin of safety for the long term, in my opinion. They pay a 3.6% dividend. The P ratio, trailing 12 months, guys, is a 4, which is horrible. And the truth is, I'm being patient with this one because the auto sector usually gets hit the worst, or it's one of the worst hit in a recession. So that's why I'm like, okay, we got Q1 GDP negative, Q2 it's going to be negative. We're going to be in a recession. Things are most likely going to get worse before they get better. I might as well just be patient with Ford. And if it gets to $8, $7, I'm going to be rewarded, in my opinion, with this stock for the long term. And another one I guess we could mention, if you guys stuck till the end, let me know your thoughts down below in the comments, or let me know that you did stick till the end and smash that like button. Another one is CCL. CCL is one now that it's at $8.75. If this falls under $6.50, $6, this is one that I'm going to consider buying, even though if we look at their financials, they are not doing well. I mean, trailing 12 months revenue, $5.8 billion, when in 2018, they did $20 billion. In 2019, they did $21 billion. So their revenue is getting destroyed right now, and their net income is just, it's non-existent. I mean, this just doesn't exist, right? They were doing $3.1 billion in profits back in 2018. That's net income, and that's on top line of $18 billion. So they were pretty nicely profitable. Not the most profitable business out there, but $18.8 billion top line, bottom line $3.1 billion. Okay, solid. They did $2.9 billion profits in 2019. Net income, and then in 2020 they lost $10 billion, $9.5 billion in 2021, trailing 12 months. Now they lost, or trailing 12 months, $9.2 billion. So they are getting thrashed right now, guys. And who knows, if they don't get a bailout, they might go out of business. But I'm gonna take a risk if this gets down to $3, $4, $5. Hey, I'm going to throw a couple hundred shares at it, and we'll see what happens with it, how it goes down, guys. So with that being said, I'm going to wrap the video up. If you all enjoyed it, hit that like button. Let me know your thoughts in the comments. And if you want me to make more videos kind of breaking down financials, looking at that stuff, let me know your thoughts about that in the comments. And again, hit the like button, subscribe, join my Patreon, get your 10 stocks from Moo and your 6 stocks from Webull. All of that linked down below. And with that being said, catch you later, guys. Peace out.